Hey, what is going on everyone? Welcome back to another YouTube video. In this video, I'm gonna go over why I've chosen Traders4Traders as my prop firm to get funded as a trader. For those of you who don't know me, my name is Jerome. I'm a full-time Forex trader based here in Sydney, Australia, and I'm also working alongside Austin Silva as an ASFX coach. Before we get on with the video, I just wanna give a quick shout out to all my new YouTube subscribers. Thank you guys so much. I really appreciate you all checking out my content and liking my videos. I'm glad you guys are getting some value and knowledge out of it. Before we move on, I also just want to give a quick mention that I'm releasing at the end of Q1 a beginner's guide or course, you could say, completely free. So in the description box below, you'll find a link where you can register your interest and get updated on anything I'm adding. And also you can submit some questions as well in the comments below, saying anything you would like to put in there that would help you as a trader. So if you're interested, check out the link below, sign up, and if you're not, let's get on with the video. So one thing that has been increasing in popularity is prop firms and funded companies giving traders capital to trade. Over the next few months, I can imagine a few more of these companies opening up, these prop firms that are willing to give traders money. I've done a video on this before, what to look out for in prop firms and trading companies. Just little questions you should ask yourself before committing and giving them your hard-earned cash to start this challenge. And I will be doing a video in the future how to prep yourself and get prepared for taking these challenges so you're not just kind of going in circles and keep failing them. Getting funded is a very great way for traders who don't have enough capital to make trading worthwhile or meaningful, or simply those traders that have a lot of cash locked up in trading where they can now outsource it and they can put their trading capital in other asset classes and start diversifying and investing in other things, other sources of income, whether it be in the stocks, real estate, or whatever it is. But in this video, I want to go over in particularly Traders4Traders. Now, this is the company I'm currently with. I'm currently in the process of doing their practical assessment on their $100,000 trading account. It is a practical assessment that requires the traders to make 10% in any given time frame. That is one of the major pros why I went with T4T, is because there is no time limit to achieve your profit target. Where for FTMO, for example, you are kind of have to achieve 10% within 30 trading days. That can lead a lot of stress onto new traders, even experienced traders trying to force trades, making bad decisions, getting emotions kind of caught up, and leading to you failing the account and kind of just spinning your wheels, wasting money. So in this video, I'm just gonna go over the pros and cons of Traders4Traders. Like anything, you gotta look at it on both sides. You can't just be all positive about it. There's always gonna be some drawbacks. So in this video, I'm gonna cover some pros and cons and answer some questions that I've been getting from other people. So before we get into the pros and cons, I'm just gonna show you guys on screen. We're gonna run through it together, and I'm just gonna kind of explain and give you my thoughts on why I chose Traders4Traders, and then we'll get into the pros and cons, and we'll start talking about, how this compares to other trading companies, and more or less, like I was saying before, what made me take the leap and go for Traders4Traders. So with their practical assessment, you are looking to aim for 10% profit target. That is what Traders4Traders are looking in their traders to get funded. They're seeing if you can make 10%. So achieve a 10% profit target. You have unlimited time to achieve the target. Another thing that was really appealing to me, it's only a single assessment fee. So no monthly subscriptions, simple rules and limits. Now, these are where it's gonna either make or break you. It's gonna be your decision factor when we get into the rules and limits in a minute. I know a lot of traders that didn't want to go for T4T because the rules and limits didn't suit their trading personality or their trader style. Earn up to 80% of profit, which is pretty cool. I think FTMO offers 70%, a 70-30 split. You can earn up to 80% with Traders4Traders, and we'll go through that in a minute. So as you can see there, very, very basic, very simple kind of criteria to pass their practical assessment. They're not asking too much of you, no minimum trades to take, and no minimum time frame to complete the challenge. So at the minute, I'm currently, like I was saying before, I'm doing a 100K practical assessment. I'm just cruising through it. There's no emotions. I don't have to try and force trades to hit my profit targets. I'm just doing as I normally would any trading day. This is where your decision factor and where you have to kind of have an open mind comes in. So as you can see here, looking at the screen, if you make 10% or above, you will get a 60% payout. So a 60-40 split. 15% and above is a 70% split, and a 20% profit or above is 80% profit split. So if you make 20% profits or above within any given month, you'll get a 80-20 split. So you get 80% of the profits, and Traders for Traders will get 20. Now, before we get on with the pros and cons, another few questions I've been getting is the scale up process. Now, you can just get the 100K account. You can even get, like, I think there's a $25,000 and $50,000 account you can get as well. But let's go with what everyone kind of goes for, and that's a $100,000 trading account, funded trading account. You can scale it up all the way to $1 million. Now, $1 million, that's a lot of money, especially in trading. You know, you make 5% in a month on $1 million, you're gonna be a very happy trader. This is another kind of make or break deal for a lot of people coming into Traders for Traders that are looking to scale up the trading account. They want more capital, and this is a way of doing it, because I know a lot of prop firms out there are kind of capped at around 300,000, which is the average I've seen. So with Traders for Traders, you can buy the $100,000 practical assessment. You can get your 10%, pass the assessment, get funded with real money, and you can start trading and try and hit these performance metrics, which they call it in Traders for Traders, that will allow you to scale up your account. So going through this on their website, traders must hit all performance metrics to scale up their account over a 2-month period. Some of you guys may look at these metrics and kind of freak out, like a 65% win to loss ratio. Like, how do I maintain that over a period of 2 months? Very simple. It isn't as hard as you think. Be more selective, but that is a whole nother topic for another video. For now, let's talk about the scaling plan and how it kind of works. So in order to scale up your account, you will need to make a profit target of 10% and maintain performance metrics for 2 months. So as you can see here, level 3 is the $100,000 account. This is what most people will be starting out with. So let's say you pass the practical assessment, you get funded, great, yay, everyone's excited. Now let's say you have the live account for 2 months, you maintain performance metrics, which we'll get into a minute, and you hit 10%, they'll then scale up to $250,000. So that'll give you an extra $150,000 capital to start trading with, bringing your total account balance to $250,000. So with the traders' performance metrics, you can see that there's a few criteria that you have to kind of hit, a few targets you must hit within the 2 months of having your funded account in order to get funded, in order to get scaled up, sorry. So the first one is the profit target. So you'll need to achieve a profit target of 10% or above. So that's the one criteria you must meet within the month of trading. You need to achieve a winning day target of 50% and above. So that's kind of self-explanatory. A win-loss ratio, you'll need to achieve a win-loss ratio of 65% and above. Now, to a lot of traders, that may seem a little bit high, but in reality, if you are a very conservative and selective trader, this won't be an issue. A Sharpe ratio, you'll need to have a Sharpe ratio of 1 or above. Now, I don't know too much about this to give information on it, but I know just by doing a quick Google search, you'll be able to find all the information you need relative to the Sharpe ratio. Trade volume, once again, self-explanatory. You'll need to have to trade not less than 50 lots before scaling up. So you got to be making, a few trades. You're not just getting lucky on 1 or 2 trades. You are actually taking a few trades, following a system, following a plan, and ROMAD. So you'll need to have achieved a ROMAD of 3 or above. Once again, I'm not familiar with this, but I know if you type it in Google, you will see all the answers you need covering this. Let's quickly talk about the rules. Now, with the rules, you're gonna have to have a stop loss attached to every trade you enter in the market. Now, I know a lot of traders that just kind of open MT4 on their phone and they just buy or sell using the quick options to get involved in the market and a market order. Unfortunately, you can't do that with Traders for Traders. You must go through the order terminal and put a stop loss onto your trade. For me personally, I didn't like doing that, so I use Magic Keys. I have a discount code below you guys can use as well. This thing has helped me so much in position sizing and pretty much how I do risk management and trade management. All I have to do is hit open calculator, which brings up my 2 orders, open, stop loss, and take profit. And then I can input my risk. I have a predetermined risk in there already, so automatically calculates my position size for me. and then I just hit open trade and I'm in the market with my stop loss already attached to my order, which fits these rules, and I don't have to worry about anything else, and I just manage my trade how I would. So if you're one of those traders that are just in the habit of just quickly buying and selling and then attaching your stop loss as you're already in the trade, just something you have to be mindful of, something you got to build new habits around, not a big deal. The next rule is all trades close by 1900 GMT on a Friday. So if you are a swing trader and you like holding trades over the weekend, unfortunately, you can't do this on Traders for Traders. Holding trades over the weekend, unfortunately, they do not permit. But as for me, once again, this suits me since I'm more of a day trader. I'm in and out of my trades within the day, and I'm not holding onto positions more than 24 hours. If I do, then I definitely do not hold over the weekend. Just another thing to keep in mind on your system. If you're more of a swing trader, obviously this won't work out for you, so you're best off looking at other options to get funded from other companies. Now, this brings me to the last of the 3 rules, and that is maximum position sizing. Now, I know this will be a turnoff for a lot of traders since a lot of you can be more aggressive depending on your trader style and your personality, but you are capped at a leverage of 1 to 10, meaning for every $10,000, you can trade up to $100,000 or 1 standard lot. You unfortunately cannot place more than that. So you are always capped at a 1 to 10 leverage. So you can't take massive position size, even though you may be controlling your risk, but you're always kind of leveraged and capped at 1 to 10. This may be a turn off for a lot of traders, so something else just to keep in mind, and do your research, look at your system and find out, how profitable you'll be, how much risk you have to put in trades to pass the 10% profit target, and just know your numbers pretty much. So this brings me onto the risk management limits. Now, what I just talked about, those 3 rules with the stop loss attached to every order, all trades closed out by 1900 GMT on a Friday, and the 10 to 1 leverage, not over leveraging or over position size on your trades, they will result in your account not getting reset or breaching the limits. So what we're going to talk about now is the limits, and if you break these 2 risk management limits, this will breach that rule, and you will unfortunately have to reset your account, bring you back down to 0 and starting again. So let's talk about the weekly loss limit. I'll bring up the screen and we'll just go through it real quickly. So the weekly loss limit is in place to protect your profits from the previous week. It is set at the beginning of each week and remains static for the rest of the week. It is calculated as 2% of the account starting balance subtracted from the week's starting account balance. So to give you a few examples, I'm just going to run through this really quickly with you guys. So once again, starting account balance of $100,000, 2%, which is your $2,000 weekly loss limit. So let's say week 1, you have your account balance at 100,000, you've started the challenge, yay. You lose, your weekly loss limit is 9,800, 2% of your account balance. You cannot go below 98,000 during week 1. So let's say going on to week 2, your starting balance is $103,000, Your weekly loss limit is now $101,000, 2% from your high watermark, your highest account balance. So the 2% calculation remains during the duration of the practical assessment. Once you start the live trading account, this 2% is increased to 5% after achieving 10% profit, giving the trader much more latitude in the live account. Now, this is awesome. Yes, it makes the practical assessment a little more harder, but in the terms, not really. It's just gonna take a little bit longer because all you have to do is just reduce your trade size, which I have done. So as most of you know, with AceFX, we use a grading system, A, B, and C. Each one of those grades gets a predetermined set risk. So I've had to just kind of reevaluate, restructure it, and then I just trade it differently how I would trading my own live account. So obviously I'm not putting 1% on any given trade because it'll only take 2 losses and I've already hit my weekly loss limit. But yes, the good thing is it does increase to 5% once you become a profitable trader and get funded the live account making 10% profit. So that is a good thing. Now, once again, I know traders that are more aggressive, they don't want to put, 0.2% risk on trades. They want to put, maybe 1%, 1.5. Once again, this may not be for you. There are other trading prop firms out there and companies that allow you to be more aggressive and they allow this type of behavior. Me personally, I'm more selective, more conservative, and I'm kind of focused more on my risk. So this works out perfectly for me. I've never blown an account because I always kind of just focus on risk management. So now this brings me to the second limit, which is maximum allowed drawdown. The maximum drawdown is a trailing drawdown until reaching the account start balance, where it becomes static at that point. It is calculated by subtracting 4% from the high watermark, your highest account balance. Now, this to me is a very good system. Once again, I know a lot of traders may kind of find this, not what they're looking for, and it might just kind of turn them off. For me, this is perfect because what they're trying to do is preserve your profits. They're trying to make you think outside the box and not giving back all your profits. So it's a safety net for you as a trader and also a safety net for them as a company. So let's just quickly go and look at the examples that I've given. So what does that mean? Again, the maximum drawdown is designed to protect your profits and also our maximum exposure, which is perfectly fine. And then they give us some examples. So week 1, account starting balance is 100,000. Maximum drawdown is $96,000. Now, once again, don't forget your maximum drawdown is $96,000, but your weekly loss limit is $2,000. So keep that in mind. So you still can't go below $98,000 on your first week. So continuing on with this example, your maximum drawdown is $96,000. During week 1, you make $3,000 profit, taking your account balance to $103,000. This is now your high watermark, and your maximum drawdown has increased to $99,000. You cannot go below this figure with your equity balance. Equity balance meaning you can't, let's say you place a trade and your stop loss may be a little bit more than 98,000. Let's say price goes against you and then comes back, even though it may have gone against you and didn't hit your stop loss. That is your equity balance. So unfortunately, if you break those two risk limits, you will have your account breached and you'll have to pay the reset fee to take it back to the starting point and then start again. And like I was saying before, the 3 rules with the stop loss, the closing trades by Friday, and the max position size with the leverage, 10-to-1 leverage, they will not cause your account to, you will not have to pay the reset fee to take your account back. You just have your trades closed out. So that just kind of brings me to the conclusion of why I kind of chose Traders4Traders and what you guys should look for going forward. And that is pretty much, there is no time limit to achieve your 10% profit target. You can cruise through it, no judgment, and kind of just focus on your trading like trading should be. You shouldn't have to be forced or obliged to kind of hit a certain amount of profit per month. Yes, it's good to have like kind of those type of goals in trading, but in reality, us traders, we can have consistency in our daily routine. We can show up at the desk following our plan day in, day out, but the market may not be on. The market might not be presenting our signals, so we kind of just have to take that for what it is. So maybe you could sign up to a challenge that does have a 30 trading day time limit to achieve 10%, but let's say the market doesn't present any signals that's in your trading plan, which you all should be following a trading plan, not just entering the market blindly, going off intuition and all that stuff. Let's say this happens for 2 weeks and you're then freaking out like, I'm gonna make 10% in 2 weeks, and you're gonna start making mistakes. You're gonna start entering trades that you shouldn't be in. You're gonna start getting FOMO, a lot of emotions, a lot of opinions. And it's not good habits to build as a trader. So that's something you really gotta take in the mind. So having no time limit was definitely the biggest selling point for me. As the rest of the rules and limits, having a stop loss placed on every order, that's something I've been doing for years. Having all trades closed out by Friday, I never hold trades over the weekend. So that was something that kind of just suits my personality and trading style. And also leveraged at 10-to-1, I never over leverage. My personal account is actually leveraged at 1-to-10. I never over risk or overexpose myself to the market. So once again, there is nothing wrong with doing that. You just gotta make sure it suits your personality. Make sure you're not coming into it thinking, it's not suiting you. You're more of an aggressive trader. Trust me, there are a lot more prop firms out there that are offering that type of stuff to more aggressive traders. And then moving on to the risk management limits. Now, of course, you're not going to be hitting every trade on the practical assessment heavy. You're not going to be putting 1% on trades. Yes, the option is there, you can do it, but you just got to be mindful that you're pretty much halfway through your weekly loss limit if you do take that loss. So going forward, you just got to be a bit more mindful and just kind of control your risk and exposure to the market. I've personally always been like that. I am, like I was saying before, I'm a very selective and conservative trader. I wait for all the probabilities to kind of line up, and then that's when I kind of execute on those high probability trade setups. I hope you guys got some value out of this video. I really appreciate your time if you stuck through and watched it all. If you haven't already, please smash the thumbs up button, subscribe to my YouTube channel, and also hit the bell icon to get notified for any future content I release. Once again, I appreciate you. I hope you got some value from the video, and I'll see you in the next one.